What's up, everybody? Welcome to the Stocks channel. Today the S&P 500 broke out to a brand new all-time high, and we are now officially in the blow-off top scenario, and this is not something you are going to want to miss. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today's SPY was up 2.07%. And the last update I told you there was a big move coming off of support, and with Nvidia's earnings and a bull trend, there was a very good chance it was going to be a bullish breakout. And today, that is exactly what we had after Nvidia smashed earnings out of the park yet again. So no matter how you spin it and no matter what narratives you want to follow, we are price action traders following the chart, and the chart has been bullish all year long. And I've been talking about this, how we are likely going to get a blow off top scenario with all of the bearish sentiment with a very bullish chart. And you can very clearly see this is the blow off top because we have this huge gap up after the earnings call. We broke out and gapped up to a brand new all-time high, and we closed right on top of that price target at 507. So the way I would view this is because we are in a blow off top scenario at all-time highs, you need to view the market as if there was zero resistance, because there really is zero resistance at an all-time high. That doesn't mean the market will go up forever. It simply means that it is a fool's game to try to call a top when you're at all-time highs. Go look at every single bear that told you this was the top, and then they told you this was the top, and now they're going to tell you this is the top. And if you go back a few weeks ago, they told you this was the top, and if you go back farther than that, they told you this was the top. And I think you're catching the drift of what I'm getting at. These bears have no clue where the top is. And if they did know where the top is, they would be filthy rich, because catching a top is a very profitable thing if you can successfully do it. What I'm trying to tell you is that you cannot successfully call a top. And I have officially proven that with this breakout candle. Because just reading the comments, a lot of you bears were telling me the top was in. This was a double top rejection. Even though I told you price action had to confirm that by breaking down below the neckline of support at 491. And all price action did was come back down here to a textbook test of a rising 20 daily moving average and bounce to a new all-time high. So the price action has not told us the top is in. That is why I told you it is a fool's game to call a top. And now all of those bears that called a top need to backpedal out of their position, and they need to continue to explain why they got it wrong, instead of just admitting they have no clue where the top is and just admitting they have no clue what the hell is going on. So don't be one of those bears. Follow the chart. The chart is telling us everything we need to know. We know exactly where we need to manage our risk from. And then, of course, there's no reason you need to be buying up here. But if you bought down here near the low risk entry, you absolutely crushed it today. So we will take this day by day. You have to take it day by day when you're in a blow off top scenario. And if we clear through this price target at 507, we're going to 514. And if we break through 514, we're likely going to 520. And we will just take it day by day. And we need to stay bullish above this breakout right around 501 to 502. And if we break down below that support, then we can look for this gap fill just above 497. So if you've been following me for any amount of time, you know we absolutely nailed the blow off top scenario. There were a lot of people getting bearish, and I told you it was more likely, even though they're rare, that we were going to get a blow off top. And here we are blowing off the top in a very bullish trend. And I will remind you, nobody knows the top, which includes me. I'm not even going to bother guessing the top. Eventually, if I do think we've seen a top because I see some extreme bearish capitulation event, I'll let you know. But I just haven't seen it yet, and I still think there's opportunities for bears to pile into this market and continue to squeeze it higher and send this blow off top parabolic. So just be disciplined. Do not follow the noise and the narratives that this is a bear market relief rally, because those people were wrong last year. Do not believe the market has to crash, because those people were wrong last year. And do not believe the market is near a top, because those people were wrong last year. We will let the chart do all the talking, and this is still a very low risk chart, because breaking down below support I told you was only a 1% drop. And if you took that low risk entry today, you made over 2.5% for only a 1% risk. So that is easily a 2.5 to 1 risk reward ratio, which is absolutely incredible as a bull to take that trade. So let the price action do all the talking, and we now need to stay bullish above 500. And if we break 500, look for that gap fill just above 497. On the NASDAQ 100 triple Qs, we were up 2.93% today, and we did break and close above that price target at 437. So even though it wasn't an intraday all-time high, we did have a closing all-time high. And as you can see from my chart, a closing price breakout of 437 brings us up here above 442. So in the triple Qs, I think we are going to 442 next. And if we get there and break through it, we may as well just go straight to 450. And that is going to be the blow off top scenario. Remember, in a blow off top, the keyword is top. So it will put in a top. But you do not want to guess the top because blow off tops are typically parabolic, which means they could go way higher than you expect and they are not rational events. So if you're trying to rationalize this market more than just following the chart, you are probably having a very difficult time trading. That's why I teach you to follow the price action and not some kind of fundamental bearish bias. So right now, this without a doubt is a bull breakout, and I just showed you SPY had a bull breakout to a brand new all-time high, so you need to respect the chart and the price action telling us we're likely going higher. Now, we did fill this gap down here, and we did open another gap with this gap up, so we do have a gap to fill down here just below 426, but in order to fill that gap, we are going to need to break down below this support at 434, so stay bull above 434, and if we break below it, then we could possibly come back down towards 428 and then 425. On the Dow Jones, we were up 1.16% today, and we nailed that price target at 391, and I told you there was a good chance we were going to 391 because we continued to close above 385, and above 385 we were likely going to 391. So again, reading the chart, following the price, not guessing of where a top might be, just simply going with the direction of the trend and absolutely nailing trades and knocking them out of the park. Now from here, 391 is a significant level, but we did hit it on increasing volume, but a lot of that was likely simply just shorts getting squeezed out. So tomorrow I would like to see confirmation that we can hold this breakout, and if we start clearing above 391, we are likely going higher towards about 395 to 400. If at any point we get rejected and break this support at the breakout at 388, then you're looking for the gap fill right around 386, and the support is down here at 385. On the Russell 2000 IWM ETF, we were up 0.76% today, and we are getting a confirmation of a pivot off the bounce of the rising 20 daily moving average of support at 196, and from here we should easily fill the gap at 201, and I think we're going beyond that, and I think we're going all the way up here to the price target at 207 and then 214. So I'm bullish on the small caps as long as we're above 196, and if we break below 196, then you need to move your risk level down here right around 190. On the ARKK ETF, we were up 2.47% today, and ARKK had that very quick breakdown below support at 48, but instantly bounced and closed back above it. So you can't view that as a breakdown because we did not get any follow through. So in ARKK, you can stay bull above 48, but if we start breaking down below 48 to 47, then we're likely getting the bear breakdown. This is likely a lower high, and we're coming down here towards 44. Above 48, I'm looking for a gap fill above 50 and a gap fill above 52. On the VIX, we were down 5.34% today, and the VIX did crush back down below 15, and we do have a bull trend in the VIX, but as long as it's below 15, we are still in a low fear environment, and we did just break out to another brand new all-time high in SPY, so that is clearly not a fearful market. If the VIX does spike out and starts breaking back above these highs at 16, then we are likely getting more fear in the market, and we may have seen the top. But with a blow off top scenario, wait for price action to confirm we've topped and don't just guess, or you're going to get short squeezed out of your position. On Bitcoin, we're currently down right around 0.5%. We're still holding that price target right there at 50,800, and we still can't break the price target at 52,700. The moving averages are catching up, and we are having support at the breakout at 47,000, so stable above 47,000, and as long as we're above 47,000, there's no reason we can't start running higher towards 55,000, and then above 55,000, we go to 58,000. Now, if we start to pull back and you get an entry to buy the dip, that is going to be the support between 47 and 48,000, and if we break that, then you simply just get risk off. On Nvidia stock, we were up 16.4% today, so obviously the earnings went very well, and we can see they beat earnings expectations by over 8% yet again. So this stock continues to beat earnings and then raise guidance, and that's why I'm telling you, do not listen to the bears that tell you this is a bubble. This is the exact opposite of a bubble. This price action is backed by actual fundamental earnings and absolutely knocking them out of the park and raising guidance. And this is one of those stocks that has a very powerful growth story. So this is the equivalent of me telling you not to short Tesla in 2021. If you were following me and my technical analysis in 2021 about Tesla, we absolutely nailed that bull run. And it was simply because we followed the price action and not some fundamental bias that it was a car company that couldn't go higher. So block out all of that crap and all of that noise and follow the chart. And right now, with Nvidia breaking out to a brand new all-time high above 746, it looks like it is trying to get to 816. Now, there is a giant gap because there's a fundamental reason we gapped up, and there are gaps all the way down here, back here at $300. And if you were one of those bears that said, Nvidia is going to fill that gap at 306, and you know who you are because I know who you are. A lot of you bears were saying that. You have been absolutely destroyed shorting the stock because we're nowhere close to closing that gap. So when you talk about gaps filling, you have to remember that is mostly in an index and an ETF of an actual indice like the S&P 500 or the NASDAQ 100. This is a fundamental growth story in a company that is in a hyper growth situation. There is absolutely no reason these gaps have to fill. So make sure you understand what the hell you're talking about if you're giving opinions or advice. Because if you're sitting here saying Nvidia has to go back down to $300 just because there's a gap there, honestly, you should not be even talking about the stock market. So right now, this is so obviously a strong bull trend, and we have another bull breakout. So it's as simple as staying bullish in Nvidia above 740. And then if we break below 740, we can start talking about the gap down here just below 689. So right now, it looks like we are going higher towards 816, even though it doesn't mean we have to go there tomorrow. That looks like where Nvidia is trying to go. If we break down below support, then look for that gap fill and the support right around 703. On Tesla stock, we were up 1.36% today, and as you can tell from the arrow, I still think we're going higher towards the price target at 207, and I actually think we're going higher than that. It is as simple as staying bullish above 189 and 183, and if we break below those, get risk off, because if we break below those, that's a bearish breakdown, and it means we're likely going to 167 to 173. If we can hold this breakout at 197, we should have a very quick chip to the gap fill, but we do have very tight Bollinger Band squeezing, so it may take a few days for those Bollinger Bands to expand. On Apple stock, we were up 1.12% today, and Apple is doing largely what I expected, which is this head and shoulders fake out where the bears are going to say that Apple is a head and shoulders breakdown, but they didn't get any confirmation when they break below the neckline. And even if we do break the neckline, it could be a bear trap around that support at 177 before we go higher towards the price target right around 187. So I do think Apple is going higher, and I think it's going much higher, but we'll take it day by day. We need to close the gap below 187, and then we need to break this high at 190. Above that, we go to 195, but let's take it day by day and level by level. So jumping back over to the S&P 500, today was a great example of why bears calling tops do not know what they're talking about. And anybody trying to tell you they know where the top is totally deceiving you, because there are many times within history where the market has gone on parabolic blow-off top rallies. And you can even look at markets like 2020 and 2021 where the bears were extremely bearish because of everything going on around the world. And they were telling you the markets were going to crash. And then you can go back to the late 1990s where the market just continued to go higher. Even though that was a bubble, if you got bearish too early, you got absolutely obliterated and lost all of your money. So we have no idea how high this market's going to go. Nobody has any idea how high this market's going to go. And if you really are listening to bears, they wouldn't have even told you the market was going to make a brand new all-time high this year. Not only have we made a brand new all-time high, but we have made a significant brand new all-time high by a significant margin. So you can't even say the market is double topping anymore. So this is the danger with following people's opinions instead of the chart. We follow the chart and the price action and the trend, and it has been bullish, and we have remained bullish this entire time. And that is why we are absolutely crushing this market. So again, be unbiased, manage risk around all of these critical levels that I'm giving you, and understand that the trend is your friend. We need evidence from the price that the trend is rolling over before we can say we no longer have a bull trend. These people continuing to guess where the top is are not making any money, and they're likely losing a lot of money instead of simply being like water and following the trend. You are not smarter than the market. You do not know what the market is going to do. The least you can do is put the odds in your favor and manage risk, and that is how you are going to become a profitable trader. This is what I teach you to do, and this is what we do each and every day on the Stock Channel Discord server. So if you want to come learn how to trade price action and get intraday updates and technical analysis from me, then you just need to come join the Stock Channel Discord server, which you can find out how to join in the link in the description of this video. If you want buy and sell alerts, there's also bank trade alerts, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.